Welcome. We have a collection of intriguing perspectives on the Federal Reserve, exploring its recent actions and predictions for 2025. You might find the Fed's December interest rate cut surprising.
It was certainly unexpected. Many analysts view it as a misstep given the current economic landscape. While inflation has shown some signs of slowing, the economy is exceeding expectations. This, coupled with potential inflation risks in 2025 from factors like tariffs, potential changes in immigration policies, and the lingering effects of tax cuts, suggests the Fed might have acted prematurely.
So it seems some believe the Fed should have delayed entering its pause mode for rate adjustments.
Precisely. Waiting for more tangible evidence of sustained inflation improvement, perhaps as late as March 2025, could have been a more prudent strategy.
I see.
Now with the Fed in a holding pattern, further rate cuts seem unlikely until the inflation picture becomes clearer.
Let's shift gears to a topic often overlooked, the Fed's balance sheet.
Sure.
It sounds like a bit of a mystery regarding its potential influence. Can you shed some light on this for our listeners?
It's definitely an area worth examining. The Federal Reserve has been gradually reducing its balance sheet, and projections indicate it will stabilize at just over $6 trillion in 2025.
Interesting.
However, the size of the balance sheet might be less significant than its composition.
That's interesting. What specifically about the composition should we be paying attention to?
The key lies in the Fed's holdings of long-term Treasury and mortgage securities. They've been reducing these holdings, but a substantial amount over $1 trillion worth remains.
Okay.
The crucial question is whether the Fed will continue this reduction by shifting these long-term securities into short-term bills. Such a move could potentially push long-term interest rates upward. It's a decision with significant implications, and the Fed is currently grappling with it.
It sounds like Chair Powell's preference for fewer long-term treasuries on the Fed's balance sheet adds another layer of complexity to this situation.
Indeed. More long-term treasuries held by the private sector could potentially exert upward pressure on rates, creating a dynamic worth monitoring.
Now, turning our attention to the relationship between Fed Chair Powell and President Trump, it seems like things could get a little tense in 2025.
The potential for increased friction is certainly there. Powell has consistently maintained a strategy of disregarding criticisms and focusing on the economy. However, with the Fed in a pause mode and the possibility of President Trump seeking someone to blame if inflation persists, Powell is likely to face heightened pressure in the coming year.
That sounds like a recipe for potential clashes. Do you see any factors that might mitigate this?
It is worth noting that Powell's term concludes in a couple of years. The possibility of him choosing to step down adds an intriguing wrinkle to the situation.
Let's delve into the potential impact of President Trump's upcoming appointments to the Fed. It seems predicting his choices is a challenge.
Predicting presidential appointments is always a difficult task. However, two figures often mentioned in this context are Kevin Warsh and Kevin Hassett.
Can you elaborate on their backgrounds and potential candidacy?
Kevin Warsh, a former Fed governor, has been interviewed by President Trump for positions in the past, but he has been passed over. Kevin Hassett currently chairs the National Economic Council.
What makes Hassett a potential frontrunner for a Fed position?
He has a history with the Fed, having worked as a staffer decades ago. Additionally, he led President Trump's Council of Economic Advisors during his first term, giving him valuable experience navigating the president's style and priorities.
It sounds like Hassett has developed a close working relationship with the president and a certain level of comfort in managing his expectations.
Those factors certainly contribute to his potential suitability for a Fed appointment. He is someone worth keeping an eye on as the situation unfolds.
It is fascinating to consider how the dynamics between the Fed and the administration might shift with new appointments. Let's step back for a moment and assess the Fed's performance in navigating the economic challenges of 2024.
It is generally acknowledged that the Federal Reserve successfully averted a recession in 2024. The economy seems to be heading towards a soft landing, a scenario where growth slows gradually without tipping into a contraction. However, inflation remains a key concern for policymakers, and they are looking ahead to 2025 with a degree of uncertainty, particularly given the unpredictable nature of the Trump administration.
The Fed's recent rate cut and signaling of fewer cuts ahead have generated considerable debate. Some argue it was a misstep. Do you share that view?
The timing of the rate cut does appear questionable in retrospect. Inflation improvement slowed in the fourth quarter, and the economy outperformed the Fed's expectations.
I see.
This, coupled with potential inflationary pressures in 2025 from tariffs, potential shifts in immigration policies, and the ongoing impact of tax cuts, suggests the Fed might have been better served by pausing the rate cut cycle sooner.
So they're now in this pause mode, waiting for more concrete signs of inflation moving towards their target.
That is the current stance. They have indicated that tangible improvement in inflation is a prerequisite for any further rate cuts. This makes it highly highly unlikely they will cut rates in the first 2 months of the year. They might consider it by March, but even that is uncertain.
You mentioned earlier the importance of the Fed's balance sheet. What are your thoughts on how this might evolve in 2025?
The balance sheet has not received sufficient attention in recent commentary. The Fed is currently in the process of winding it down, reducing its holdings of assets. The pace of this reduction is expected to slow in 2025, and economists anticipate the balance sheet stabilizing at slightly over $6 trillion.
You emphasized earlier that the composition of the balance sheet matters more than its overall size. Can you explain this further for our listeners?
The key factor to consider is the Fed's holdings of mortgage securities and long-term Treasury securities.
Okay.
While they have been reducing these holdings, they still possess over $1 trillion worth. The Fed must decide whether to continue this process by shifting these long-term securities into short-term bills, a move that could potentially increase upward pressure on long-term interest rates. This decision is pending.
It seems this is a complex issue with potential ramifications for the broader economy.
They had internal debates about this strategy even before the COVID-19 pandemic. Powell hinted at his preference for fewer long-term treasuries on the balance sheet. The implications of more long-term treasuries held by the private sector are significant and could lead to upward pressure on rates.
Moving back to the political landscape, how do you envision the relationship between Fed Chair Powell and President Trump playing out in the coming year?
Powell has demonstrated a remarkable ability to ignore the president's criticisms and threats, maintaining his focus on the economy. However, the pressure on him is likely to intensify.
Why do you anticipate increased pressure?
The Fed's current pause mode creates a situation ripe for scrutiny. The president's reaction remains uncertain. However, if inflation does not reach the 2% target, he might seek someone to blame. Powell would be the most likely target.
So discord between them seems almost inevitable.
It is a distinct possibility. Powell, in all likelihood, will maintain his stoicism and attempt to tune out the noise. However, it is worth remembering that Powell's term concludes in a couple of years. He might be open to stepping down, adding another layer of intrigue to the situation.
Let's turn our attention to the potential appointments President Trump might make to the Fed. Specifically, who do you see as the most likely candidates to fill open positions and perhaps even become the next Fed chair?
Predicting President Trump's actions is always challenging.
Right.
However, two names frequently mentioned as potential contenders are Kevin Warsh and Kevin Hassett.
We discussed Hassett's background earlier. Can you tell our listener more about Kevin Warsh and his potential candidacy?
Kevin Warsh served as a Fed governor in the past and was interviewed by the president for the Treasury secretary position. However, he has been passed over twice.
That's an interesting point. He has been considered, but ultimately not chosen.
It raises questions about the level of trust and confidence the president has in him. It will be interesting to see if Warsh remains a contender for future appointments.
Given the president's tendency to value loyalty in close relationships, it seems plausible that Kevin Hassett might have an edge in this situation.
His experience as chair of the National Economic Council, coupled with his prior role leading President Trump's Council of Economic Advisors, provides him with a deep understanding of the president's economic thinking and policy preferences.
Hassett's familiarity with the inner workings of the administration could make him a more effective advocate for the Fed's policies and priorities in discussions with the president.
That is a plausible scenario. His ability to navigate the complexities of the relationship between the Fed and the administration would be a valuable asset.
The potential for increased tension between the Fed and the White House in 2025 underscores the importance of these appointments. The individuals chosen will play a crucial role in shaping monetary policy and influencing the trajectory of the U.S. economy.
Their decisions will have far-reaching implications for businesses, investors, and consumers alike. It is a period of significant uncertainty, and the stakes are high.
Well, it seems we have covered a lot of ground in our exploration of the Federal Reserve's recent actions and the potential economic and political landscape of 2025.
We have. We examined the Fed's controversial rate cut, the intricacies of its balance sheet management, the dynamics between Fed Chair Powell and President Trump, and the potential impact of upcoming appointments to the Fed.
These are all crucial factors that will shape the economic outlook in the coming year.
The interplay between monetary policy, political pressures, and global economic forces creates a complex and dynamic environment. It is a situation that requires careful monitoring and analysis.
Thank you for sharing your insights and expertise with our listeners.
It has been my pleasure.
Till next time, goodbye.